So, we will be starting off for the introduction. We chose SD Plantation, which used to be Sime Darby Plantation Company, a globally recognized player in the palm oil industry. It is such a good example for such of the financial analysis. Sime Darby Plantation's financial strategy balances stability and growth. So in year 2023, despite equity which will declining to 12.4 billion, the company achieved 18.43 billion in revenue. Its dividend policy ensures over 50% of recurring profits are shared, paying 15 cents per share and maintaining investor trust. Innovations like Genome Select Seeds and Project Infinity boost productivity, while divesting underperforming assets strengthens finance, ensuring resilience against market volatility and challenges like declining oil prices and others.
Hello Doctor, my name is Nuramira Azlin binti Muhammad YUSOF, and today I'm going to present about Sime Darby's background. Before we start, Sime Darby has changed its name to SD Guthrie. So, what is SD Guthrie? Sime Darby Plantation Berhad, or SD Guthrie, is the world's largest producer of certified sustainable palm oil, contributing 12% of global production. With over a century of expertise and present in 90 plus countries, the company operates across the entire palm oil value chain, including plantation, milling, refining, and manufacturing. SD Guthrie drives innovation through initiatives like Genome Select Seeds, yielding 34% more oil per hectare, and Project Infinity, which enhances productivity via mechanization and digitalization. Despite a 12% revenue decline in 2023 to 18.43 ringgit billion, the company remains committed to sustainability, targeting net zero emission by 2050, and operates 234 estates, 68 mills, and 11 refineries worldwide, exemplifying leadership in sustainable agriculture and environmental stewardship.
Next, let's explore Sime Darby Plantation financial performance from 2021 to 2023. So the first one is debt to equity ratio. The company's total debt remains stable at around 5.3 billion. However, shareholders' equity dropped significantly from 16.8 billion in 2021 to 12.4 billion in 2023. This caused the debt to equity ratio to rise from 0.31 to 0.45, indicating higher reliance on debt. A concerning trend, but still within manageable levels. The interest coverage ratio declined from 8.83 in 2031 to 5.32 in 2023 due to lower earnings driven by declining palm oil prices. Despite this, it remained above the critical thresholds of 5, showing the company can comfortably cover its interest obligations. Meanwhile, the dividend payouts were consistent, peaking at RM 0.1075 per share in 2031, then dipping to RM 0.08 in 2022, and rebounding to RM 0.0895 in 2003. Dividend yields range from 2.49% to 1.89%, reflecting market fluctuations. This demonstrates a commitment to shareholders even during challenging market conditions. So, in summary, Sime Darby Plantation shows stable debt management, strong dividend policies, and resilience despite the impact of declining palm oil prices. It remains a well-managed company navigating tough economic conditions.
So I'm gonna present about theoretical framework on SD Guthrie. So let's explore how this element contribute to the company financial health and investor confidence. So first is capital structure. Defined capital structures it's refer to the mix of debt and equity that a company used to finance its operation. For SD Guthrie, the debt to equity ratio stand at 22% as of 2023. This indicates a conservative approach where the company favors equity over debt. So why is this important? A lower ratio means that SD Guthrie can reduce its interest obligation and has return on equity and also minimize financial risk. This strategy choice helps stabilize cash flow, which is crucial for maintaining operation efficiency. For the second point is dividend policy. Now let's talk about dividend policy. This is influenced by the two main theories, stability theory and also signaling theory. Stability theory suggests that companies should maintain stable dividend payout to foster investor confidence. So SD Guthrie has amplified this by consistently paying dividends since 2017, which signals its financial health and commitment to shareholder returns. On the other hand, signaling theory posits that consistent dividend convey management confidence in future profitability. By maintaining a reliable dividend payout, SD Guthrie reassures investors about its ongoing success. Thank you.
Okay, next is internal and external factor affecting Sandabi plantation. So first, economic condition. So Sandabi's income depend on crude palm oil like CPO price. So when high price means they will get a higher profit, but when the low price, that means it will reduce their earning. So global supply, demand and competition like soybean oil, it will affect the price actually. So they will use the rules like the EU sustainability regulation. It helps them to increase costs, but are necessary to keep selling in certain market, not every market. So number two is business strategy. Okay, Sandabi, they use technology and innovation to stay ahead with another competitor. So they use Project Infinity, like they use the digital tools to cut costs and improve efficiency. So another one is they use genome select, which is they develop a better seedings to produce more palm oil without using more land, and also it reducing environmental impact. So number three, shareholder expectation. Of course, the shareholder will expect steady profit. So Sandabi, they meet this by keeping dividends stable even during their tough time, which means to keep investor confident. So number four, example of action they do is selling underperforming plantations like in Indonesia. They help free up money for better investment by using machine and digital tools in lower cost and improve productivity. So for conclusion, Sandabi, they tackle challenge like CPO price change and sustainability rules by using a smart technology, and this help them to stay competitive, satisfy shareholder and meet global standard.
Next, we move to the recommendation. So we suggested Sandabi to optimize its capital structure by increasing the use of low interest debt to financing strategic initiative while maintaining a strong equity base for stability. Adopting a flexible dividend policy tied to earning can balance shareholder expectation and fund innovation. Next is prioritizing sustainability investment such as biogas and solar project, and enhancing traceability system will solidify its leadership in responsible agriculture. After that, scaling mechanization and digitalization initiative under Project Infinity and investing in R&D can address labor shortages and improve productivity. Lastly, strengthening governance, stakeholders engagement, and trading program will align strategy with market demand and sustain long-term growth.
So, we can conclude that Sandabi Plantation adopts a cautious yet effective financial approach, maintaining a 0.45 debt to equity ratio in 2023 to balance stability and growth. Despite equity the company declining to 12.4 billion ringgit, it achieved 18.43 billion ringgit in revenue. The company consistently shares over 50% of recurring profits, paying 15 cents per share, ensuring investor trust. So the innovations like Genome Select Seeds and Project Infinity by the company itself, it improves productivity while divesting underperforming assets, strengthen finances. These strategies ensure resilience that can be challenges like falling palm oil prices and rising interest coverage ratios. That's all for me. Thank you.